Okay, so can Margaret, I'm having a problem with the internet this morning because of a heavy rains here. If sometime maybe we have a problems here, so hopefully that you're patient with that one. So we're going to proceed to class. Yeah? Okay, so the things that we're going to discuss with you today here is the first thing that I'm going to discuss here. I just want to proceed with your tutorials. I just want to proceed with tutorials 4. Tutorials 4, the one that you have here is on the, where is my tutorial 4? Okay, this is questions. Okay. I need to have both the question and answer. So wait for this one for a while. Okay, I'm still searching for this one for a while. Okay, I try to combine all the answers in tutorial 4. This is only the answer. I just want to have both the questions and answer. Yes, this is tutorial 3, tutorial 4. Okay. So we proceed with tutorial 4. Okay, cannot find the files now. Okay, so firstly that you have with you the tutorial 4. Maybe this is what we have. Oh, page on. Okay, let me close this one. Okay, so this is what you have with you, yeah? Tutorials. We're going to analyze the items and then I'm going to show you for the answers, yeah? Okay. Wait a little bit. Okay. So we're going to look at this one. So you can see this one, yeah, questions. So later I'm going to discuss answer with you. Okay, try to for a recorded set. Okay, yes, I know that tutorials 3 not yet discussed, and we're going to discuss that one later. We have time, but I need to proceed with tutorial 4 because we don't have much time for the, so that if we discuss at least 1 or 2 questions from tutorial 4, you can study for your exam on that 25th. Yeah, I know that we don't discuss yet your tutorials 3 questions 3. Okay. So I just want to proceed with tutorial 4 first. Later on, if we have time, then we discuss question 3. If not, I'm going to provide you with the recorded questions. Okay, you're going to proceed with tutorials 4 first. Okay, so this is what you have for tutorial 4. I just want to discuss with you to question 1 and questions 3 because question 1 is a 3 is a bit different. Question 2 is similar because we acquired the company. Yeah? Okay, this is what we have for a sepakat berhad. Sepakat have these informations. Okay, so now we're going to look at here one that we have. Okay, so the things that you need to focus here is on this item. Gain on revaluations of financial asset because this is not a non-cash item. It's not a non-cash item. So this is a thing that you need to be careful here. We need to minus this item. Finance cost here is not a part of the operation. Also, you need to add back this one. Okay, and now you're going to have in this company, we have a loss here. So 569 is a loss here, 569. So, and then you have a profit that attributes to the NCI and also to the parents. NCI has a profit here, but for the parents here, we have a loss. Okay, this is the asset that we have. Okay, asset, so non-current asset, all the PPE, intangible, so all these the assets. Okay, so if you look at here, the things that we have here. Okay, we just want to analyze the information. When I show the time, we prepare the statements. Okay, so for the information that we have here, we analyze the additional information first. Okay, Wow, we're going to discuss later, questions 3. Okay, so on 30th of May 2017, Sepakat bought 80% equity. Bought means that when you bought your assets and liability will increase. Asset and liability will increase. Okay, and then at the same time, you're going to have a goodwill. Okay, at the 200 million. So you bought here at the 200 million, 80% equity, or the value of 200 million by issuing 48 million equity shares at the value of 2 ringgit and 50. So you're going to have here, you're going to issue shares capital going to be increased because you issue a capital. At the same time, cash also going to be increased. Cash increased by 80. The shares capital is going to increase by 120. Yeah? So you're going to have 48 times with 2 ringgit and 50. So you're going to increase by 120. Increase in the shares capital. Okay, so this is the amount of the assets that you have. Okay, the amount of the asset in Semangat. So you need to total up all the assets that we have here. So when you total up here, the amount here is equals to 180. So 180, and then it said that the NCI was valued using a fair value. The fair value of the NCI here is 47. Total up the COI here is 100 and 200. Okay, plus NCI 47. So you're going to have here is 247. 247 compare with NIA 180, and then you're going to have a goodwill of 67. Yeah, you're going to have a goodwill of 67. So once you have a goodwill of 67, it said that goodwill was impairment tested on 30th of April. Impairment loss going to transfer to the administrative expense. So we need to check whether there is an impairment loss. Yeah? So the impairment loss that we have here, we need to check. So you look at your goodwills here. Goodwill's beginning balance here is 67 from here. From this one, your beginning balance is 67. Right? Now the balance of your, look at in your balance sheet, the base here is 60. So this is the ending balance. So beginning balance, we have a 0 here, 0 plus 67, so 67. Okay, then going to compare with the ending balance, so means that there is a reducing by 7. So reducing by 7 here means that you have impairment loss of 7. Okay, so that once you have impairment loss of 7, this is already included in the administrative expense, so means that you need to add back this amount. Yeah? Okay, and then item number 2. Okay, for item number 2, there is no disposal of non-current asset during the year. No intangible asset was acquired apart from those acquired from the acquisition. So you look at your intangible asset. So intangible asset, beginning balance, you have 350. And then plus the one that you acquired here is 30. So you're going to have 380. And then you compare with the ending balance here. So ending balance that you have here is 315. So reducing by 30 here means that this is an amortization. Amortization. So we need to add back also because amortization is not a part and not a cash item. Yeah. So this is relate with the amortizations. Depreciations of PPE here is 207. So we need to minus 207. So for the for the adjustment for the profit, we need to add back this 207. Yeah? All the transaction relate to 6% bond or in cash. So we look at the 6% bond. 6% bond, you have beginning balance of 550. Now it become 680. So there is an increase by 130. So increase in 100 by 30 means that there is an increase in cash because this is your liability. Yeah? Okay, shares dividend were paid during the year by Sepakat and Semangat. So we need to calculate a dividend for both Sepakat and Semangat. So this is the questions that we have. Okay, now I'm going to look at the answer for this one. Okay, so the answer, maybe I can copy this one for a while. Okay, so where is the answer? Okay, I only have this one, sorry, to have the answer. Answer. Okay, maybe I need to combine this one so much easier. Okay, wait for this one. Just want to combine the file. I already combined this one, but I don't know what happened to this file. I cannot find this file. Okay, so wait for a while. Okay, so what you see now with you? Is it this answer? This one? Of you? Or not? Any of you? Are you still there? Any of you there? Okay, the answer. Okay, now we look at the answer for question 1. So we already analyzed all the informations that we have here. Now we're going to look at this one, the answer is here. Hopefully, do you check your answer? Okay, we start with the profit before tax. So in this case, profit before tax, you have a loss here. So loss here. So you go in bracket operate a negative here. Finance cost, we need to add back. This is not a part of the, okay, we need to add back because it's not part from operating. And then gain or revaluation, previously we already add, so we need to minus because this is a non-cash item. Okay, this one is not a operating activities, not operating. So we need to add back the finance cost. Okay, depreciation charge here is already given. So depreciation charge here is already given, so you have here 207 here is item number 2. Okay, goodwill impairments we already calculate here is 67 from the acquisition minus 60 the ending balance, so there is an impairment for 7. So impairments here you need to plus also because this is non-cash items here. Okay, and then for amortizations of goodwill, intangibles here we already calculate. So this is your beginning balance plus your ending, plus your, so this is your, okay, beginning balance 350 plus 30 from the acquisition. So you have 380 compare with 350. So you're going to have reducing by 30. So reducing by 30 here means that there is an amortization. So amortization again, so we need to plus it because non-cash items. Okay, then we need to analyze your current asset and current liability, yes, which is related with your non-working capitals. Okay, for inventory, okay, inventory you have a beginning balance 275. Okay, so 75 plus 25, 25 come from the acquisitions. Okay, acquisitions, and then we go into minus the end. So you have 300 here. So 300 compare with the ending balance. So ending balance that we have here is 400. So ending balance 400. So means that there is an increase by 100. So increase by 100, since this is an increase in the current asset, so you need to minus increase in the current liability, you have to plus it. Okay, so be the other way. So this one we need have to minus. Okay, and then for trade receivables, okay, trade receivable beginning balance we have 340. Okay, there is no trade receivables in the Semangat, so only the difference between the ending figures and the beginning figures. So the beginnings you have 240, 340, and then you have the ending here is 460, so there is an increase by 120. So increase here means that we need to minus. Okay, only 2 items that we have for current assets, and then for current liability here we're going to have trade payables and also tax payable. Tax payable is related with the income tax. So just analyze for the tax payables. So the tax payable that we have here, okay, the trades payable beginning balance 280 plus the one that you have in a new company in a Semangat here, so you're going to have 295. Okay, 295 compare with the ending balance here. So ending balance here is 466. So it means that there is an increase by 171. So increase here means that we need to plus it. Okay, plus 171. So you're going to have cash generated from operation negative 345, and then you minus again the finance cost. So you're going to have 49, and then income tax paid. So income tax paid, look at the tax payable. So tax payable beginning balance that we have 90, plus the amount that you paid in the income segment here is 80. So altogether we have 170. Compare with the ending balance. So the ending balance that we have in the tax payable here is 80. Yeah? So reducing by 90. Yeah? Reducing by 90. So reduce here means that you pay. Yeah? So in this case, you're going to have net cash outflow. Outflow here because we have a negative figure. So negative figure 484. Okay, then we look at the financing activity. So investing first. Okay, for investing here, the purchase of a subsidiary. Purchase of subsidiary cash that you paid here, cash paid. Okay, and then cash available. So to find the aggregate cash. So aggregate cash that you have here is 60 negative purchase. Okay, now we analyze your PPE. So item that you have for non-current asset is a PPE, intangible asset we already done for the amounts, and then goodwill here is for the impairments, and then we have one item last here is a financial asset. So we look at the PPE first. Okay, for the PPE beginning balance you have 2,400. Okay, beginning balance you have 2,400, and then minus your depreciations here. The amount of depreciation that we have here is 207. Yeah, minus depreciation 207, and then plus the one that you acquired here, you have 120. Okay, you have that one is 120. So that is the amount that you have here for the PPE. Yeah? So you're going to have altogether 3. Yeah? Going to have here 2, 3, 1. The ending balance so that you have is 2360. 2360 means that there is increase by 47. So increase by 47 means that you purchase. Purchase here means that you're going to minus it. Okay. And then for financial asset, okay, if you have any question, please. So that one. Okay, for financial asset, okay, you start with 180. So going to have here, and then gain on revaluations of financial assets. So you're going to have a gain here. Gain on revaluations of financial asset 20. Yeah? So you're going to have 200 here. Altogether is 200. Compare with the ending balance that you have for financial asset. So ending balance that you have here is 210. Yeah? So 110. So 200 and 210. We're going to have here 280 plus a disposal. So there is a increase by 10. So increase by 10 means that you purchase an financial asset. So increase by 10. So increase by 10 here means that you purchase a financial asset. So that's why we need to minus it. So altogether we still have a negative 117. Okay, and then we're done with the investing. So look at the financing here. Okay, for financing here is item that you have for the equity and also the long-term liability or non-current liability. Yeah? So the equity that we have here. Okay, for the equity, we're going to look at your shares capital. Okay, shares capitals that we have here. If you look at here, the beginning balance of your shares capital is 1650. Okay, going to have here is 1650 beginning balance. Okay, 1650. And then we're going to add with 120. Okay, 120 here is from the acquisitions. Acquisitions, which is item number 1. You increase number of shares you bought is using your own shares. So you're going to have here, and then compare with only 2 items that we have here. So you're going to have here is 1770. Okay, 1770. Compare with the ending balance here. Ending balance that you have here is 1900. So the difference here is 130. So 130 here increase means that you have it from the issuance of ordinary shares. 130. Okay, and then the bonds here is only one bond that you have here. Just compare between the ending balance and the beginning balance. So increase by 130, so means that there is a proceed also. You're going to receive some cash. Okay, now look at the dividend to the NCI. Okay, for the NCI here, if you look at here, the NCI has a balance of 0. At the beginning balance, they have a 0. Okay, and then plus 47. 47 is from the one that you acquired, from acquired. Okay, and then shares of profit that you have here is 5. Okay, shares of profit 5, so you're going to have 52. So 52 compared with the ending balance. So the ending balance that you have here is only 50. So it means that there is reducing by 2. So this is a reducing by 2 here is considered as a compared to the NCI here. Okay, now look at the equity dividends for parents. Dividend for parents here, we look at the returns earning. Look at the earning beginning balance 1205. Okay, returns earning beginning balance 1205. And then going to minus because we have a basically we have a loss, so we're going to minus it. So minus loss the attributable. So parent here is 654. So you're going to have the amounts here will be the difference there is 5551 compared with the ending balance. So the ending balance that we have for this one is for the RE here is 504. So 504 there is a reducing by 47. Yeah. So reducing by 47 is the amount of the dividend paid. Yeah. Together you're going to have a net cash inflow from financing activities. Yeah. Okay, so when you total up the final operating, so operating we have negative 484 and then negative 117 for the investing and then plus 211. So you have negative 390, negative or net decrease, net decrease in cash. And then cash and cash equivalents at the beginning period. So cash and cash equivalents at the beginning period, if you look at here, the beginning period you have 230 and then please be careful for the cash here, look at whether you have any bank overdraft. So bank overdraft here is 0, so the beginning balance is 230. The ending balance here, so the ending balance here is a 0 and then look at bank overdraft here, so you have 160. So 160 bank overdraft is a credit, yeah, or a liability, so in the bracket you have 160 here. So this is 390 minus 230 is your beginning balance. So you're going to have negative 100. Or here to find this 390 here, look at the beginning balance. So the beginning balance that you have here is 230 positive here. And then the ending balance that you have here is 160 negative. So it's going to be reducing by 390. So this one is just to has a check or check whether your answers here is the same as the net decrease in as cash and equivalent should equals to the difference between a beginning balance and the ending balance. So the beginning balance that you have here is 230 positive, but the ending balance you have 160 negative, so means that your net decrease in cash here will be 390. So when you calculate here, item number 1 add with item number 2 and item number 3 should be a decrease 390. Yeah? Okay, so that is you have for question 1. So any question for question 1? Same or different answer that you have here? I'm a little bit rushing here, so I just want to proceed with the next one. Yeah? Questions 3. Yeah? If you have any question, please pass out. Yeah? Okay. So I just want to proceed with question 3. The questions 2, I just want to show the answer because question 2 and question 1 is similar. The difference here is only for questions 3. Yeah? So now look at the questions 3. Okay, because question 3 here is about the disposals. Yeah? Disposals, a little bit different from question 1 and questions 2. Okay, questions 2, I just want to show the answer only. Okay, this is what you have for questions 3. Okay. So you're going to have a profit from operation, profit before tax. This amount that we're going to focus here on this amount, and that 7,700 here, income tax, and then this is amount of the that you proceed. Okay. This one direct analyzer, we just analyze the items. Okay, first one to discuss question 3 after this. Okay, I'll try to limit the time and on tutorials. Cash flow statement. Okay, so now we're going to look at the Utara here on dispose. Now we look at the disposals. Question number 3, disposal of entire 80% owned subsidiary in LLB Berhad, cash consideration 3.4. So when you dispose here, assets and liability going to be reduced, and then you're going to have a gain on disposals. Okay, the company measure the non-controlling interest based on the proportionate shares of acquiring net identifiable assets. Okay, so NCI here will be based on net assets. So you total up here all the assets that you have, excluding the goodwill. Okay, because the goodwill here is already because the amount that you have here is NCI is measured based on a proportionate net share. So there is no goodwill for the NCI. So the goodwill here is only for the parent. So you just total up all the assets and liability that you have. So altogether you're going to have 3,800. So 300. Okay. The 300 is your total net asset that you have here. So the NCI here, so NCI have 20% time with 20% here. So the value of the NCI here will be 600. So this is what we need to calculate. Later on we need to use this information. Okay, so this is related with the information that we have here. So now we're going to look item number 2. For the item number 1, you just need to calculate for the NCI. Okay, all the assets, net assets here should exclude the amount of the goodwill because it was measured based on the proportionate shares of acquiring net identifiable assets. So means that there is no goodwill for the NCI. So we need to exclude the amount of the goodwill. Yeah? Okay, on 10th of April, Utara acquired 30% interest in the steel and paid cash 2 million. So they acquired as associate, so you paid 2 million. So this one is related with your investing activities. Yeah, going to reduce your cash by 2 million. Yeah? Okay, so reduce the cash. Cash will be reduce the amount. Yeah? Okay, the carrying amount of the PPE, property, plants and equipment was 1.5. Okay, 1.5 already sold. But you sold this one at the price of 1.8. Yeah, so cash that you receive here is 1.8. So receive cash 1.8, and then if you look at here, there is a gain. Gain on disposal, which is 300. So, okay, so the next item that you have here, cost of sale include depreciation expense. So you have depreciation expense of 1.2 million. So we need to add this amount back. Yeah? Okay, so you need to prepare the consolidated statements of cash flow. Okay. So we're going to look at item number 3, question 3. Okay, for question 3, we're going to start with the net profit before tax, 700. Okay, so adjustments here, depreciation one you have here. If you look at here, depreciation number 4. Just show you the one that we have information here. Is number 4 given here, item number 4. Okay, now we're going to look at if there is impact of goodwill here. So goodwill here, so the amount of goodwill in the beginning balance that we have here for the goodwill here is 1,000. 1,000, actually 1 million. Okay, 1 million. And then we're going to minus 200. 200 is the one that we dispose. So we're going to have a balance of 800. So 800, then compare with the ending balance here is 600, means that there is a reducing by 200. So 200 here become the impairments of a goodwill. Yeah? So this one is start with the ending balance. So you can start either with the beginning balance minus the one that you dispose is equal to 800. Now the ending balance becomes 600, means that there is a reducing by 200. So reducing here means that there is a goodwill impairment. Yeah. Okay, depreciations item number 4. Okay, shares of profit in associate, we need to minus that amount. Yeah? So this one is from your income statement. You have to minus. Gain on the disposal of subsidiaries also we need to minus because this item is a non-cash item. Yeah? Okay, and then gain on disposals of the PPE also we need to minus because we already recognize this 1,000 1.8 here in your investing. Yeah, so you need to minus gain on disposal 200. Yeah. Okay, and then the finance cost we need to add back because it's not an operating, it's not operating, so we need to add back this 500. So we're going to have a operating profit before changes in working capital 7.8, and then we analyze the current assets and current liability. Okay, for current asset, the first one you have inventory. So inventory that you have here, the beginning balance here of inventory here is 2.8. Yeah? 2.8, and then minus the one that you dispose here is 500. So 500, so you have a balance of 300. 300 compared with 3550 means that there is an increase. So increase by 1250. So 1250 increase here means that, so increase in a current asset minus increase in the current liability, we need to plus it. Okay, this one we're going to minus it. So there is an increase by 1250. Okay, and then for trade receivables, so beginning balance, you have two 200s. Okay, 200 is your beginning balance. Okay, and then minus the one that you dispose here is 280. Minus 280. So you're going to have 1920. 1920 compare with 1750. Okay, so compare with 1750, there is a decrease of 170 compare. So you're going to have here 200s here. Yeah, 200 minus that 280. So you're going to have here is 1920. 1920 compare with 1750. So there is a decrease by 170. So decrease in the trade receivables here, you're going to plus. Okay, and then for trades payables, okay, we have done there. Then look at your current liability. You have deferred tax related with taxation, trades, and then you only have trades payables. Okay, trades payables beginning balance that we have here. Okay, you're going to have beginning balance of 300, and then you minus the one that you dispose here. Okay, trades payables that you have here is 180 minus 80, so you're going to have 1120. 1120 compare with 600. So you're going to have reducing by 520. Okay, reducing means that you need to minus it because this is your liability. 520. Okay, and then we have cash generated for operations here, 6200, and then interest paid. Okay, interest paid, there is no information about the interest paid here. There is no accurate interest. You just use the finance cost that you have here. Interest paid, or sometimes they will use about finance cost, the same. Okay, so you're going to have here 500. Okay, tax paid. Okay, for tax paid here, going to have here is 11,400. Okay, going to calculate for the tax paid. Okay, tax paid that you have here is from your deferred tax. Okay, deferred tax. You have beginning balance. Okay, 130. 130 tax paid. Yeah, it's your deferred. Sorry, deferred tax that you have here is 2,100s. 2,100s. Okay, and then you're going to minus the one that you have in that you dispose here is 0.5 or 500 here, 500, and then you're going to plus the amount that you paid here. The amount that we paid for income tax here is 2,000. So you're going to have here is for 100, so 3,600. 3,600 that you have here, we compare with 11,400. So there is an increase by 7,800. So 7,800 increase means that you make a payment here. Okay, that you have here. Okay, so the cash generating from operating activity with 13,500. Okay, now we look at the investing activity. So investing activity, we have your item which is your long-term asset or non-current assets. Okay, non-current asset, we start with your PPE here. So your PPE, the one that you have for your PPE here, put another colors here. Okay, PPE beginning balance here is 32. Okay, minus 1,500, the one that you dispose. And then you need to minus also 1,200 for a depreciation here, depreciation. And then other things that you need to minus here is PPE, the one that you have in LLB that you dispose here. So you're going to have this amount. And then you total up this amount and then you compare. Okay, you're going to compare with this 20. Yeah? We're going to have altogether will be 26. Okay, 26,700. So compare with 20. Yeah? So compare with 20 means that there is a reducing. So reducing by 6,700. So reducing by 6,700 here means that that one will be your proceed. Proceed. Reduce means that you sell that item. Yeah? So you're going to have a proceed 6,700. Okay, and then you also has a proceed from the disposal of PPE. This one is related with item number 3. The cost here is 1.5, is include here, and then the amount of cash that we receive here is 1.8. Yeah? Okay, and then the disposal of subsidiary, you dispose at 3.4, and then need to minus the cash that you have in that cash availables in LLB. Yeah? So this is cash available, and then this is a proceeds to find a aggregate cash. So 2.9. Yeah. Acquisitions of associates here is items number 2. Acquisition. So minus here. Purchase of furnitures and features. There is no additional information for features and furnitures. Fittings, you just compare between the beginning balance and the ending balance. So beginning balance is 1,000. The ending balance here is 3.5. So means that there is an increase by 2.5. So increase means that you purchase that items. Okay, and then have a dividend received from associate. So dividend received from associate is under investing, yeah, because this associate is your investment. Yes, you put it under investing. So dividend received by associate. So you look at the associates amount here. So investment in associate. So look at your investment in associates here. You're going to have 22,500. So this is what you have for 22,500. And then you bought a new associates. Interest and associate, you acquired a 30%. So plus 2,000 here. And then plus also shares of profit. Profit from shares of associate 700. So you're going to have here 25,200. So 25,200. Compare with the ending balance. The ending balance that you have for associates here is 15,610. So 15,610. You're going to compare with that two figures. So, okay. So you're going to have here is equals to 9594. So you're going to have here is 9594. So that is what I have for the dividend received from the reducing means that you receive a dividend from associates. 594. So cash generating from investing activity 16,494. Okay, then we look at the financing here. Okay, for financing, we're going to analyze item which is relate with your item that is relate shares equity. Equity, the first one is your shares capital. Okay, shares capital, if you look at here, your beginning balance is 52. Now you only have 701, reducing here by 29. This is reducing. So we're going to call this one as a share buyback. Means that you buy back your own shares. Okay, and then you have a dividend paid. Okay, dividend paid by parents here. Okay, look at your RE here. RE beginning balance, you have 2,700. Okay, and then plus with the shares of profit for 700. So you're going to have here is 7,400. And then compare with the ending balance. So ending balance that you have here is 6,400. So reducing by 1,000. So reducing by 1,000 here means that this is the amount that you pay as a dividends. Okay, then we look at the NCI here. So the last thing that we have here is NCI. So NCI beginning balance 1,800. Okay, and then plus shares of profit 1,000. Okay, 1,000 here minus 600, the one that we disposed in, the one that we calculate previously in item number one, the one that we disposed. So you're going to have 19 here. You're going to have only 19. Then minus 600, so you're going to have here is 1913, 13 here, repair. Okay, this is the one that you dispose plus, not one, this one's supposed to be 1,000, 1,000, so you're going to have 2,800, 2,800 minus 600. Okay, you're going to have 2,200. So 2,200 compare with that ending balance that you have here is 2,3, yeah, 2,3. So 2,3 here, there is an increase by 100. So increase here is a proceed from the decrease in the state of the subsidiaries. Yeah? So that is you have 100 here. So general balancing here will be 25,890. So you're going to have net cash increase. Okay, total up the financing, investing, and operating. So you're going to have for 100 and plus the beginning cash beginning balance that you have here. And cash beginning balance. So cash beginning balance that we have here is negative, negative 1,100. So ending balance here is 300. 3 million is supposed to be 3 million. Yeah? Or if you want to find the decrease here, you look at the balance here to check for this one. You check for the difference between beginning balance. You have negative 110. At the end, you have a positive here, 3 negative. This one is negative. At the end, you have a positive here. So it means that you should have an increase by 100. So any questions that you have for questions 3? Okay, so once you have a dispose, means that you need to minus. When you acquired, you need to plus. Okay, the same thing that you have for questions 2. So any question for questions 3? I'm going to limit the time until another 5 minutes, and then we're going to proceed with the questions 3. So any questions that you have for this one? Okay, if not, just show you the answer for question. Yes, sorry. Oh, yeah, yes. Yeah, yeah. Sorry, I can't hear you. Yes, yes. Yes, I can hear you now. So what is your question, please? Mhm. What? This, I can't hear you because your voice sometimes I can hear, sometimes I cannot hear. What is your question like? Can you put it in the chat about that? While I'm showing you the answer for questions 2. Is it okay? You put it in the chat box. Because sometimes I can hear your voice, sometimes I can't. Okay. So just show you the answer for questions 2. Check for this one. Yeah. The question 2 is not much different from question 1. Yeah. Okay. So while waiting for your friends there, I will look at questions 2. Questions 2 is the same acquired also. So you acquired. Okay, we just analyze item that we have in questions 2. And I show you the answer for that one. Yeah? Okay, questions 2. This is what you have for Purnama. This one, you got this one. I've changed. I'm still waiting for your friends to okay. So we're going to look at this one. Is Purnama. The things you have to be given this mention loss and gain on license. Okay, and then your shares of an associate in Japan. So this amounting that we need adjustments. Yeah. Okay, and then we're going to have tax, RE, and so on. So we're going to look at the additional information. Yeah. Okay, for additional information, the one that you have here, cash purchase of PPE is total 25 here, 25. Depreciation expense is 9. Okay, for those, cannot remember who's the one who asked the question. Can you put it in the chat box? Later on, I'm going to answer your questions here. So why I'm discussing the questions too. Okay, so you have here, you purchase a new PPE here is 25. You purchase that amount, 25 million. So this one will reduce your, will increase your PPE. So but this one will reduce your cash. Okay, depreciation here is 9, so you need to add back this amount 9, and then you acquire a fully owned subsidiary for cash consideration 11,800. So cash consideration fully acquired. Now you acquire 100% fully on 11,800. So 11,800, when you total up all these assets and liability here, you also have 11,800. So means that there is no goodwill in this case. Okay, but you need to find the aggregate cash. So aggregate cash is 11.8 minus 800, 0.8. Yeah, so you're going to have 11. Yeah, minus this one. Yeah. The effect of, okay, this one is, you have to be careful. Yeah, I said that the effect of the changes. So the effect of the changes in a foreign exchange rate is on the, going to affect the cash and cash equivalent during the year. Okay, so this one need to add with your cash and cash equivalent. Okay, the gain from sales of a licensed product is in a cash proceed of 2,600. So this one is a gain here is already in terms of cash, 2,600. So you need to make an adjustment for that is amount. So the gains that you have here, 2,600 here is already in cash. So this is already in cash. So means that there is no adjustment because you already received this one in cash, this amount in cash. So no adjustment that you need to make. Okay. So we proceed with the answer for this one. Another few minutes. Proceed with the questions 2. Okay, so this is Purnama. So you start with the profit before taxation. Adjustments here, depreciations here is given in item number, look at that one, the item number 1. Depreciation sales is given in item number 1. Okay, interest expense, we need to add back. Okay, so this one we have to add back. Foreign exchange loss also need to add back. Okay, this one is not from operating. This one is related with cash and cash equivalent. So it does not relate with a operation, not relate with operation, operating activities. So, and then shares of profit here, we need to minus shares in associate, we have to minus that amount because you already add previously. Okay, and then you're going to look at your current assets and current liability. So your current asset, you have inventory, trade receivables, and then trade payables. Okay, so for in receivables here, the amount of receivables you have 34. 34 is your beginning balance. Okay, and then you acquire another 2 here. So you're going to have 36 here. So 36 altogether compare with 38. So there is an increase here. So increase in receivables here means that you need to minus it. Okay, and then for inventory you have 39. Okay, 39 and then plus 2 from the acquired, and then you're going to have 41. So 41 compare with 20, there is a decrease, 41, and then compare with 20, so there is a decrease by 21. So decrease means that we need 2 plus. Okay, Paul, I answer your question later on. Okay. Okay, so done with this one, and then we look at the trades decrease in payables. So decrease in payables, the one that you have here. Okay, so decrease in payables, you have beginning balance that you have for payables here is 37.800, and then your payables that you have here is 200, so you need to minus 200, so you're going to have 35. 35 compare with 35. Okay, 37, so minus 200. This one is acquired, sorry, acquired mean that you need to plus it. Plus, you're going to have 39,800. So 39,800 minus 5 here. So minus 5 here means that there is reducing, reducing by 34,800. See, because the ending balance here is only 5 here. Okay, so you're going to have here is 500, so 5,400. Okay, so this is 34,800. So cash generated 79,600. Okay, interest paid. So interest paid, the one that you have here is this one is related with the interest payables. Yeah? So interest payables, the one that you have here, beginning balance here is 2 plus the one that you paid here is 8. So altogether you have 10. But the ending balance here is only 4.6. 4.6, so you're going to have a reducing by 5.4. So this is what you have here. Okay, income tax. Okay, income tax paid. Income tax paid here. Okay, look at what you have for the income tax payables. Tax supposed you have balance 20. Okay, balance 20. Any deferred tax? There is no zero for deferred tax, beginning balance 0. And then plus the one that you have in income tax, you have here is taxations here is 23. So altogether you have 43. Compare with the ending balance. Ending balance in the tax payables that you have here is 8. Okay, 8. And then plus the one that you have a deferred tax here is 15. So altogether you have 23. So reducing by is item number 2. So item you acquired, cash paid, and then minus 800 here. 800 here is a cash also, cash available here. Okay, so that is what you have here. Okay, so you're going to have here is 25, sorry, 11 here. And then purchase of PPE here is already given. See? Purchase of PPE is item number 1 here, already given. Okay, proceed from sales of PPE. So going to look at your PPE here. So your PPE, the one that you have here is ending balance here is 17. Okay, 17. And then you need to minus your depreciations is 9. Okay, minus depreciation 9. And then you purchase another 25. Okay, and also you have a PPE here, another 13 from the one that you acquired. Yeah, so altogether you're going to have here is total up that one. So you're going to have here is 46. Altogether you have 46, and then compare with your ending balance that you have here is 45.6. So means that there is a reducing by 400. So reducing by 400 means that you sell that one. So you're going to have a proceeds here, 400 here. Okay, so you're going to have 35,600. Okay, and then you're going to look at your issuance of shares capital. So issuance of shares capital, say look at your equity here. So beginning balance you have 25, and then you're going to compare with the ending balance 30. So there is an increase by 5. Okay, for the long-term debt. Okay, long-term debt, the one that you have here, beginning balance 2,800. So 2,800 going to plus with the one that you have here is 4 from the one that you acquired. So altogether you have 24,800 compare with 31. So you're going to have here is 24,800 compare with 31. So there is an increase by 6.2. 6.2. Okay, dividend paid. Okay, dividend paid is the one that you have here is your, look at your RE. So RE, the one that you have here is 27,600. Okay, 27,600. Okay, and then you're going to compare with the RE that you have here, 27,600, and then plus with your profit that you have here. Net profit for the year here is 64,600. So 64,600. Okay, now you're going to have here is 200. So you're going to have here 292, 92 200s. And then you're going to have a dividend paid, interim dividend paid. So you're going to minus the one that you have here. Ending balance here is 20. RE ending balance here is 68 200s here. 68 200s here. So you're going to have here is 24. So 24 here is the amount of the dividend paid. Or if you don't want to calculate this one, you look at the interim dividend in the questions. Okay, so but better for you to show this calculation because every single figures that you show you're going to get marked for that one. Yeah? So this is how to calculate the dividend paid. Yeah? So altogether you have negative 1200. So effect of the cash and exchange rate on cash and cash equivalent. So since you have a loss here, that loss you need to minus here. So you're going to have net increase in cash and cash equivalent. So this one is referred to the additional information number 3. Yeah, it's mentioned that the loss of forex here will affect your cash and cash equivalents. Yeah? So since this is a loss, you need to minus. Yeah? So net cash and cash equivalent 500, and then the beginning balance 3 200s, and then the ending balance will be 8 200s. Yeah? Okay, so this is what you have for questions 2. Okay, so again, any questions that you have here before proceed with? We have a few, maybe half an hour, not really half an hour. Okay, we're going to proceed with questions. Okay, what is your questions here? What, when tax paid is positive, can we write tax refund? Tax paid is positive. Where to get that one? Which one? Which questions that I refer to? What? Is it these questions? Questions 3. Questions 3, yeah? Okay, tax paid. Okay, so this is your, yes, refund, yeah, because you have a loss previously, isn't it? Okay. Okay. So we proceed now with your questions 3, tutorials 3. Okay, that was, yes, this is positive means that refund. Yeah? Okay, because the company have a loss previously, yeah, with this question. Okay, we're going to look at question 3. Yeah? Questions 3 here, the one that you have, this one. Okay, so now you're ready with question 3. Yeah? Question 3 is not very complicated as compared to questions 2. Hopefully that we're able to finish in half an hour. Okay, P acquired 80% interest in A for cash considerations 20 million, and then 60% interest in C. Yeah? So we're going to have here is what you have for questions. Yes, questions 3. Yeah. Okay, so you're ready with that one, yeah? So going to stop sharing this one. Your cash flow. Later on, I answer your question. Is it okay? Okay, so we're going to share with you questions because we have very limited time here. At the end, I'm going to answer that question. So this is what you see now. The questions here, questions 3. Okay, I'm going to keep your question for a while, Paul. Okay. So look at question 3 first. Okay, so for question 3, so this is what you have. For P acquired. Okay, P acquired A, 80% interest in A for cash consideration 20 million, and then 60% interest in C. Okay. you have a 60%. Okay. On the day acquisition, this is a market price of A, B, and C. So A is RM1.20, C is RM1.40, return profit this amount. Prior to that, on 28th of May 2017, C acquired B. C already have acquired B in the year 2017. Okay, 80%. Okay, 80% in B. Okay, consideration paid by C to acquire B here is proportionate shares of the fair value of SB as a whole. Yeah, you acquired here on May. May. Okay, and then on 1st January 2020, P acquired 10% interest in B. Again, P acquired B 10%, so 10%. Okay, 8 million. Later year, on 30th of September, P disposed 10 million shares in A, perhaps for a cash considerations of 14.2 million. The market price on that day was RM1.29 and RM1.55 respectively. So P disposed 10 million unit of shares. 10 million shares. Okay, where is my questions? Okay, so I need to find the questions first. So you dispose that one on 10 million. So 10 million, dispose the amount. So if you look at the shares capitals in P acquired, P okay, shares capitals of A. So shares capitals of A, the one that you have here is 20. Shares capital 20. In A, shares capital A 20, you dispose 10 millions. You dispose 10 millions means that you dispose 50%. Previously, you have 80%. Okay, 80%. So 80% minus 50%. So now you only have 30%. So it's already associates only. So A now, there is no longer a subsidiary, it's only an associate. So when you need to prepare a consolidated financial statement, it's a combination between consolidated financial statement is combination between P, B, and C. C you have indirect interest. In C you have indirect. B you have a direct. In C you have indirect interest. So that is information that we have. Okay. Okay, and then you need to the one that you have here. A sold merchandise to B. So A sells to B here. So when A sells to B here, okay, A here is only an associate. Associate because now you already disposed. Okay, 25% of sales. So the shares that you have here is only 30%. So you need to calculate that one. In the year, the related sale was 4.5 million and then 1.6 million still remains in the inventory. So 1.6 here, you need to time with 25% to find for the URP. So the URP here will be 400. 400 scale. Okay. P sold piece of land to B. P to B here, this is a downstream sales. Okay, for 5 million. The land was piece of 5 million. The land was originally bought by A on 31st August 2015. Yeah? So P sold lands here. So the value of lands here, any value it had. Okay, you have gain on disposal of land. So you have a gains here on the disposal of land here to 560. So this one is already calculated. You don't have to calculate this one. Yeah? Already given. So you need to eliminate only this one. Yeah? Tax rate 25%. Tax effect on unrealized profit. Okay, should be ignored. No changes in shares capital or dividend were paid during the current year. Assume revenue and expense occurred eventually throughout the year and then measure the NCI at a fair value. Yeah? Okay, so I'm going to look at the answer for that one. Questions 3, yeah? Your answer for questions 3. There is a little bit amendment that we need to do for questions 3, but I'm not going to amend that one. I'm going to give you the answer based on what you have in the questions. This is a thing that we need to make an amendment. Suppose that if you look at here, the dividend income here is supposed to be the dividend income which is after tax. It's supposed to be 180. So the tax here, this one will affect your profit here. This one also will affect your taxations amount, but I'm going to give you an answer based on the figures that you have in the questions. Suppose that, okay, because if you know that, if you still remember that any dividend should be net after tax. But if you put it here, dividend income before the profit, in a profit before taxation means that this is the gross amount. Yeah. Okay, but okay. So I'll give you the answer in terms of this one. Okay, I'm not going to amend the questions. Yeah. If you amend the questions, you're going to affect the rest. Okay, but you need to remember that any dividend should be paid net after tax. Okay, so now we're going to analyze the answer for this one. Yeah. Okay, so this is what you have here. So going to have here. So the first thing you need to look at the equity. Yeah? Okay, so this is what you have for the company here. Okay, we start with the parents. Before this, A has a 80%. Yeah, 80%. After that, they dispose 50%. So means that the A is no longer a subsidiary of B. Yeah? So at the beginning, directly, the P has a in A is 80%, so means that NCI has another 20%. Okay, in C, P have 60%, and that means that NCI has another 40%. So in B is indirect, yeah, indirect. So A acquired 10%. Sorry, P acquired 10% was in January 2020, so 10%. Indirectly through C, okay, P has a shares in B, yeah, indirectly. They have another 60% time with 80% because B and C has 80% in B, yeah. They have 80% in B. So indirectly, we're going to have this one C again, sorry. C have a, if you look at here, C acquired 80% in B. Okay, C acquired 80% in B. Okay, when the profit was 4 million. Yeah? Okay. So we're going to have here is 60% time with 50, 60% time with 80%. So you're going to have 48% here. So indirectly, it's have 48%. Okay. So we're going to have here. So for 10 and 48, so you're going to have 58. So for the NCI here, 40, and then directly here, you have 80 by C here. So 80 by C, and then plus another 10 by P. Yeah? So altogether 90. So directly NCI only have 10%. Indirectly 40 times with 80%. So 40 times with 80%. So you're going to have here is equals to 32. So altogether 42 here, and then you have here is 48. So this is what you have for the movement in the equity. Okay, now we're going to look at the journal entry. So P dispose shares. P dispose shares in A. So become here 10. So you dispose 50%. So disposal 50%. So you need to find the COI. Okay, the COI here is 20 million divided by 80. So divide by 80 here is to find the value of the company as a whole. So the value of the company as a whole, because it said that the NCI is measured using the fair value. So you're going to have here, during that times, the value here is 1 ringgit and 25 here. So 1 ringgit and 25 times with 20. Times with 20, so you're going to have here is 25 here. Or you can calculate like this one, 20 divided by 80%. So you're going to have here is equal to 25. 25 times with the remaining shares. Remaining shares that you have here is 30%. So you're going to have 7,500. So the returns profit here, return profit brought forward 3.5. And then this one is at the acquisition date. So you're going to have 450. And then this is a shares of profit. Shares of profit for the years here is 2 million. Time with 9/12 here. So 9/12 here, because from 1st of January until 30th of September. So you have 9 months. 1st of January until 30th of September, 9 months. So shares of profit that you have here is only for 9 months time with 30%. So you have 450. So altogether, the value, the carrying amount of your investment is 8.4. And then you're going to have a shares of the fair value of the remaining stake. So fair value